A tension world. In a twist no one saw coming, the planet's two largest economies, the United States and China, have hit the reset button on their trade relations. After months, even years of tension, sky-high tariffs, and a trade war that has kept global markets on edge, it seems there's light at the end of the tunnel. Stay with us because we're going to break down what's known so far about this historic agreement, what it could mean for the global economy, and most importantly, how it could directly affect your life and your wallet. This is the analysis you can't miss. Welcome to our channel. This past weekend, specifically on May 10th and 11th, 2025, senior officials from the United States and China met in Geneva, Switzerland, for negotiations that have been described as substantial and which, according to initial reports, have culminated in a preliminary trade agreement. Although the full details are still eagerly awaited, there's talk they will be revealed as soon as tomorrow, Monday. The signals coming from both powers are, for the most part, optimistic. Sources close to the U.S. administration, including comments attributed to President Trump himself, speak of a total reset in trade relations and that much has been agreed upon. Key figures such as U.S. Treasury Secretary Scott Bessent and Trade Representative Jameson Greer led the American delegation, while on the Chinese side, Vice Premier He Leifeng has been at the forefront of the talks. This rapprochement comes after a period of enormous economic friction. Let's recall that the United States had imposed tariffs of up to 145% on a wide range of Chinese products, to which Beijing responded with 175% tariffs on American goods. This tit-for-tat dynamic generated enormous uncertainty, affecting global supply chains, making products more expensive for consumers, and curbing investments. Companies worldwide were caught in this crossfire, seeking alternatives often more costly to avoid the impact of tariffs. Although, as we say, the fine details are not yet public, analysts are already speculating on the possible key points of this new understanding. It is expected that one of the main components will be a significant de-escalation of tariffs. This does not necessarily mean their total and immediate elimination, but rather a gradual reduction that will ease the pressure on importers and exporters. Another crucial aspect could be China's commitment to increasing its purchases of American products, a point that has been a constant in Washington's demands. This could range from agricultural products to manufactured goods and energy services. In return, the United States might ease some of the restrictions imposed on Chinese tech companies, although this is a particularly sensitive issue, and we will have to see how far the concession goes. The protection of intellectual property is another of the historic battlegrounds in the trade relationship between the U.S. and China. It is highly probable that the agreement will include stricter clauses and verification mechanisms to ensure that American companies do not see their innovations and patents infringed upon in the Chinese market. Furthermore, issues such as the opening of the Chinese market to more foreign companies, the reduction of state subsidies to certain Chinese industries that Washington considers to generate unfair competition, and transparency in currency practices could be addressed. If this agreement materializes and is implemented effectively, the ramifications for the global economy would be profound and generally positive. First, we would see a reduction in uncertainty. Financial markets usually react favorably to stability and the elimination of geopolitical risks. A lasting agreement could boost investor confidence and encourage long-term investment. Second, we could witness a revival of international trade. The tariff war not only affected the US and China, but also had a domino effect on many other countries whose economies depend on the global value chains linked to these two superpowers. A normalization of relations could mean relief for these nations. Third, inflation. Tariffs ultimately are often paid by consumers through higher prices. A reduction in these rates could help moderate the inflationary pressures that have been felt in many parts of the world. From the cost of home appliances to the electronic components in our cars or phones, many prices could be positively affected. Now, the million-dollar question: what does all this mean for the average citizen? Lower prices. As we mentioned, if tariffs go down, it's likely that the price of many imported products, especially those coming from China or using Chinese components, will decrease. This could include everything from clothing and toys to electronics and furniture. more options, and availability. The trade war sometimes limited the availability of certain products, or made some options so expensive that they disappeared from the shelves. A freer trade flow could translate into greater variety and better access to goods. Job market. For countries whose industries export to the US or China, or that are part of their supply chains, an agreement could mean greater stability and even job growth. If your job is linked to international trade, directly or indirectly, this is good news. Investments and savings. The stock market's reaction to an agreement is usually positive. If you have investments, pension funds, or any type of savings linked to the stock market, you could see a favorable impact. However, it's always important to remember that markets are volatile, and a diversified strategy is crucial. General cost of living. Lower inflation and a more stable global economy usually contribute to better control of the cost of living. While many factors are at play, an agreement of this magnitude is an important piece of the puzzle. Despite the initial optimism, it is crucial to maintain a dose of caution. First, as we've said, the details of the agreement are not yet fully known. The devil, as always, will be in the details. We will need to analyze the fine print to see the real scope of the commitments. Second, implementation and compliance are key. In the past, there have been agreements that later faced difficulties in their execution. Both parties will need to establish robust verification and dispute resolution mechanisms to ensure that what is agreed upon is fulfilled. Third, not all signals are uniformly positive. Some sources, such as a Chinese state news agency, have published editorials warning against unilateralism, protectionism, and economic coercion. This suggests that, although an agreement may have been reached, underlying tensions and fundamental differences in economic vision could persist and will require ongoing management. Furthermore, this agreement is framed within a complex network of international relations. We will have to see how other important players such as the European Union, India, or Japan react, and how this new bilateral understanding affects multilateral trade forums. In short, the announcement of a trade agreement between the United States and China is, without a doubt, one of the most important economic news items of the year. It represents a potential turning point after a period of confrontation that has generated significant costs globally. If confirmed and successfully implemented, we could be facing a scenario of greater stability, lower prices for consumers, and a boost for global economic growth. For you, this could translate into relief in the cost of living and better overall economic prospects. However, the history of trade relations between these two gigantic economies is long and complex. This agreement, however significant it may be, is likely another chapter, not the end of the book. We will closely follow the publication of the details and analyze their implications as they become known. What do you think of this possible agreement? Do you believe it will really make a difference? How has the trade war affected you so far? Leave your comments below. We want to know your perspective. And if you found this analysis useful, don't forget to give it a like, subscribe to our channel, and activate the notification bell so you don't miss any of our updates on this and other crucial topics that impact your world. Thanks for joining us, and see you next time.